The Fed is stealing from you. Michael Burry exposes the Fed. Big short investor Michael Burry slams the Fed for its trading scandal, warns of inflation using Costco, and deletes his Twitter profile again. Today we're going to talk all about what Michael Burry just exposed about the Fed and why he thinks the Fed is stealing from you. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway in the comments. Now let's get to our topic. The big short investor, Michael Burry, blasted the Federal Reserve for its trading scandal, underlined the inflation threat using Costco, and deleted his Twitter account yet again this week. Bond and stock markets depend on a Fed stripped of all credibility, Burry said in a now-deleted tweet. He cited the central bank's mismanagement of the global financial crisis, its decision to cut interest rates 3 times in 2019, and the revelation this month that 2 of its regional presidents, Robert Kaplan and Eric Rosengren, traded stocks and other securities last year. The Scion Asset Management chief attached a screenshot of Kaplan's latest financial disclosure form, which showed the official traded millions of dollars worth of Tesla, Chevron, Johnson & Johnson, and other stocks in 2020. Both Kaplan and Rosengren announced their resignations this week, the latter citing health issues. Burry, who has warned of a huge market bubble and predicted the mother of all crashes is coming in recent months, also rang the inflation alarm. Inflationary mindset is not something you'd want to short, he tweeted. Ask Costco. Costco's finance chief, Richard Galanti, noted the rising cost of goods such as oil, coffee, and nuts during the big box retailer's earnings call last week. He listed a raft of inflationary pressures, including higher labor, freight, and commodity prices. He also noted shortages of containers and products such as computer chips, greater transportation demand, and delays at shipping ports. It's a lot of fun right now, he quipped. Galanti also warned the increased costs of freight and other items would be permanent, and said Costco has passed on those higher expenses to customers via price hikes. His comments challenged the Fed's narrative that the recent spike in inflation is transitory and will fade as the economy grinds back into gear, and align with Burry's expectations. Burry has deleted his Twitter profile a few times this year and offered no explanation for his latest departure. The investor is best known for his lucrative bet against the mid-2000s housing bubble, which was featured in the book and the movie The Big Short. He also paved the way for the meme stock boom this year by investing in GameStop in 2019. If you've been following inflation in recent months, then you could see it getting stronger, just like Burry said it would be in his tweets. Interestingly, Michael Burry calls out the Fed's inflation rates in his tweet and calls them a liar. You'll see later in this video why he did it and what he meant by it. When people talk about inflation, they often refer to Consumer Price Index, CPI, which is a measure that examines the weighted average of prices of consumer goods and services. For example, food, beverages, transportation. You can calculate it by taking price changes for each item in a basket of goods and averaging them. Divide the cost of the market basket in a year by the cost of the same market basket in a base year. To track inflation, one has to look at how does that index change over time. On this graph, you can see inflation in the last 10 years. Simply put, when goods get more expensive, it's called inflation. If they get cheaper, it's called deflation. However, you can also look at core inflation, which excludes food and energy prices. Why would you want to do that? Because those groups are often quite volatile and prices go up and down in short times. Now that you know those two terms, you'll be able to better understand what Michael Burry meant when he calls out the Fed's inflation rates. Michael Burry doesn't like the Fed's inflation rate metrics. Recently, Dr. Burry called out the Fed on Twitter that they've very carefully chosen the figures with which they calculated and displayed inflation, all with the purpose of showing inflation close to 2%, which is the Fed's long-term inflation target. What Michael Burry wants to tell is that the Fed is reducing the top 31% of categories with higher inflation and the bottom 24% of categories with lower inflation. When you look at data like that, there will be lower inflation, of course. Moreover, Burry refers to inflation obtained by calculating and removing the upper 16% and lower 16% of categories, referred to as the Dallas Fed trimmed mean inflation rate, When this way of calculating inflation is taken into account, inflation hits almost 3% in July 2021. The Fed, on the other hand, uses the categories that best illustrate their monetary policy, thus showing inflation measured by these metrics, and they have made this clear to the public. On the other hand, Burry's argument is quite noticeable and clear. The question is to what extent such things can be set up. I think the future will best show inflation, and by closely monitoring both of these inflation rates, we'll see who was right. Michael Burry also said that right now we're going through the greatest bubble of all time. So is the market in the greatest bubble of all time? According to Michael Big Short Burry, it certainly is. People always ask me what's going on in the markets. It's simple, he wrote on Twitter. Greatest speculative bubble of all time in all things, by 2 orders of magnitude. Burry observed earlier in the year that hyperinflation was coming for the US, and in a manner not all that different from how it happened in the Weimar Republic. Weimar Germany was hit with a period of rapid inflation from 1921 to 1923 that caused significant political instability and suffering amongst its people. A loaf of bread cost around 160 marks at the end of 1922 in Weimar. By the end of 1923, however, the same loaf of bread had a price tag of roughly 200 billion marks. The hyperinflation was caused by a massive increase in the money supply when the German government attempted to pay off its World War I debts by selling its currency in exchange for foreign ones. The Treaty of Versailles required that Germany pay its debts back in either gold or foreign currencies, forcing the mass sale of marks. And as the mark fell in value, Germany needed more and more of them to buy foreign currencies. As a result, the German monetary base increased exponentially, effectively undercutting any value it once had. The US government is inviting inflation with its modern monetary theory-tinged policies. Brisk debt, GDP, M2 increases, while retail sales, PMI stage 5 recovery. Trillions more stimulus and reopening to boost demand as employee and supply chain costs skyrocket, Burry warned in February. On the topic of Weimar, he drew comparisons between the former German state and the current economic climate in the US. Prices in Germany were steady, and both business and the stock market were booming, Burry said. Speculation alone, while adding nothing to Germany's wealth, became one of its largest activities. The fever to join in turning a quick mark infected nearly all classes. Everyone from the elevator operator up was playing the market. And this comment was made before AMC's latest moonshot to a new all-time high. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye!